What is going on, kids? What's going on, guys? Good afternoon. Fed decision coming in 15 minutes. 14 minutes to be exact. Coop, what's going on? Let's do this rate cut. Yeah, there's going to be a rate cut, obviously, and it's going to be 25 basis points. Anything above that is going to be wild. QE possible? No. Rate cut is what they're focused on. Hello from Spain. What's going on? I want to join your Discord. Link is in the description.
Welcome back to the exchange. Mortgage rates holding near 3-year lows ahead of the Fed decision. Diana Oleg joins us now.
Isn't this already planned into the market now? I think you mean priced in. And yes, the 25 basis point rate cut is priced in. What Jerome Powell might or might not say is not necessarily priced in. Bro is muted. No, you're just deaf or you don't know how to work your speakers. Kapil Kanal, how do you think the market will react after a 25 basis point cut? Everyone's going to freak out over what the intraday move is going to be because you're going to see what seems to be like a large wick, but the 25 basis point rate cut is priced in. However, depending on what Jerome Powell says, things could change from there. Is it low volume? Really? It doesn't. No, the levels seem all right. Shafiq, what's going on, man? It's going to be a hawkish cut. Yeah, I guess I can agree with that. Guys, hit that thumbs up so that other people find this stream. Hit that thumbs up. Thank you guys for acknowledging that the volume is good. Hello from Lebanon. What's going on? Andres from Lebanon? I guess it's possible. Haktua. Bro is stuck in 2021. Is that supposed to be funny? Big fan of yours. Appreciate you. Hi, Z. What's going on? Slim Trady. That Jones boy. What's going on? Hello from Rwanda. What's going on? Pato. Hello from Melbourne. Mo Abbas. What's going on? Should I buy a call on SPY? No, you should log off and close your account. Hope your birthday was amazing. Thank you, Surf. Hello from Antarctica. Bullshit. But hello. Imagine they cut 0.5. Yeah. So here's what I want to address. The last time that they cut the last time they did a surprise cut was September 2024. Certainly possible that they do a surprise cut, obviously. Can't say it's impossible. It's not against the laws of the universe or the laws of physics. Is it plausible? No. I mean, it's just not likely, right? But certainly if Jerome Powell says that unemployment is getting out of control, we saw the large jobs revision. Remember, the jobs were revised down by almost 1 million jobs. That is the biggest revision since 2009, I believe. So he could certainly cite that and say, look, it's our responsibility to get ahead of the jobs market that looks like it is unraveling right before our very eyes. And we just don't trust the jobs data. And the situation could be a lot worse. So we're going to cut by 50. Only problem is inflation wasn't that great. PPI came in lower than expected. It came in actually at negative 0.1%, but CPI was not that impressive. Came in line. And actually month over month, CPI came in 10 basis points higher than expected. So For those reasons, I don't expect them to cut by 50 basis points. And then, of course, all the newbies are going to freak out on the first move. So remember, there are at least two moves during FOMC. There's going to be the move at 2 o'clock, which is in 9 minutes. And everyone's going to be like, why is the market doing that? And then there's going to be another move when he starts talking. And then likely a third move when he's done talking. So you're going to get 2 to 3 moves, and all the noobs are going to be hella annoying in the chat asking, why is the market doing X? When clearly this is the biggest binary event that we have in the markets. Are you going to trade the news? Certainly, if I find a trade, I will trade the news. Hello from Jerome's Closet. What are you, his secret boyfriend or something? Hello from Taliban. Get on, bro. If it wasn't you, I'd be like, what the hell? What's good from Hawaii? It's crazy to think that in Hawaii, it's still early morning. What's going on? Tunisia, what's going on? Los Angeles. Right down the street. What's going on? Hello from Kenya. What do you think hold will do if there's a 25-point cut? Yvette. What are you talking about? What do I think hold will do? Do you mean gold? I guess the G and the H are right next to each other on the keyboard. So through a series of very intense logical deductions, I assume you mean gold. I think 25 base point rate cut is priced in. You're looking at 0 DTE options. Futures. You're just asking for it, trying to trade 0 DTE options here. Queens, New York. Jason Okinawa, appreciate your donations to St. Jude, man. Thank you so much. Hello from Boca Raton. Bonnie, what's going on? Haroon, hello from Germany. What's going on? Miri's trying to get me to say the country that houses all of the PDF files. If you know, you know. Ray Rodriguez, what's going on? Staten Island, part of the Discord, painting today. Not trading, just here for the entertainment. What's going on, Jamie? Staten Island. Wu-Tang. Otherwise known as Shaolin. Hello from Great Britain. I was just there, actually. Hello from Biloxi. What's going on? Rod, $20 to St. Jude's. Appreciate you. Thank you so much. João Tiago from Portugal. Bom dia. Thailand, baby. Hitman trades. If you're living in Thailand, but you're not actually Thai, what are you doing out there, bro? What are you doing out there walking the streets of Phuket? Juan Pablo Rodriguez Argente donated $20 to St. Jude. Appreciate you. Hello from Pakistan. Ahsan Nawaz, Pakistan. Estonia. Oh, I want to go to Estonia, bro. That's on my list. Where in the UK? I went to London. But before that, I was in the great country of Ireland, which is not in the UK. Nor is it in Great Britain. Thailand is the best choice. You play all day and at night you trade. I really, really hate Asian hours, so I disagree. I love Asia, but I don't like trading Asia hours. Honestly, Europe is goated. Z, Mabuhay from the Philippines. Salamat po, Fropello. Michelle G, I live in Ireland. Lucky, I loved Ireland. Andres, thank you for your donation. Who was your mentor? Your mother. No, I'm kidding. Who was my mentor? In terms of what? Life or in trading? Kenny, I know, bro. Thanoon, what's going on, bro? $20 to St. Jude's. Appreciate you. Spy, red or green? The tards have come out. It's going to be red and green. Calls or puts? Close your account. Have you been to Romania? On my list. Hi, Z from Dubai. Dubai. What's going on, bro? All right. Have you ever been to Greece? Oh, many times. Castellos Way donated $5. Appreciate you. Will this session come with a free row session? Says Thanoon. You know that row sessions are always on the table, bro. It just depends on who decides to be nice and who decides to be a clown. Right now, the market is pretty much chopping up, waiting for 2 o'clock. Now, let's take a look at the high time frame real quick. We're bouncing off this fair value gap. I do see a move. I would love a move up to here. I have ES on the left, NQ on the right. Would love to see a move up there. Maybe potentially a short, but it's not going to be that clean, and shit's going to move really fast. But let's see what the rate cut decision is. I suspect it's going to be 25 basis points, and then we're going to have to wait for 2:30 to listen to Papa Powell. So let's see what it is.
Today matters way less for the real economy than maybe the headlines will imply.
Yeah, I've said it before, David. I don't know what the Federal Reserve does about, auto insurance rates that are up 40%.
Guys, hit that thumbs up before the Fed rate decision.
20% a year.
Or what I call it, the tariff flu. The tariff flu both slows you down and also gives you a temperature. And that's really what's the problem here. And the Fed really isn't the remedy.
All right, so with about 10 seconds to go, we got the Dow up 0.6%. Small caps, the mid cap stocks up about 0.2%. But I'm going to stop talking because Steve's got the decision.
Federal Reserve cutting interest rates by 1/4 point as expected to a new range of 4 to 4.25%. New Fed governor and former CEO, current CEA chair, Stephen Martin dissenting in favor of 50 basis point cut. The median Fed official looking for 2 more rate cuts this year, but just barely. I'll get you details on that in a second. The statement importantly says the balance of risks have shifted. Downside risk to employment has risen. Job gains have slowed, unemployment has edged up, and economic activity has moderated. At the same time, the statement does note that inflation has moved up and remains somewhat elevated, but clearly the Fed favoring the concern about employment here over the concern about inflation. It says uncertainty remains elevated as well. On the rate outlook and the so-called dot plot, some really interesting movements here. As I said, the median Fed official forecasting 2 more rate cuts this year, but just barely. There was massive disagreements among officials on the rate outlook for 2025. Very unusual with just 2 more meetings remaining. Let me give you the data here. One official doesn't want to cut at all. There was no other dissent in favor of not cutting today, but one wrote down the current rate or the previous rate as their dot. 6 want no more cuts after this one. 9 want 2 more cuts. And one official, I guess we can guess who it is, wants 5 more quarter-point cuts this year, or 125 basis points, to bring in the Fed funds rate down below the median neutral rate. So there's a big-time dove on the committee. I think the committee at the headquarters here will have some fun figuring out who exactly that is. The median wants 1 cut in 27 and 1 in 28. So I'll give you the numbers now. 3.6 is the median forecast for this year on the funds rate, down from the current of 4.125. So that's 2 cuts. 3.4 for 27 and 3.1 for 2028. A little bit more on the economic outlook. Core inflation unchanged. The outlook for this year at 3%. Unemployment unchanged at 4.5%. GDP pushed up a little bit to 1.6 from 1.4. 5 members want to go below the 3% neutral rate in 2026. That's up from 2 in September. So they're looking for a little bit of stimulus down the road next year in the funds rate. 6 want to do so by 2027. Brian, I'll send it back to you. And the smart people around the table there to make sense of all this.
Well, that's a pretty smart person down there in D.C. too, Steve. Should we assume that it is new Fed member Stephen Myron that is calling for the 5 quarter-point cuts over the next couple of meetings?
This was my speculation leading into this, and that's what I think it is, Brian. I think it's Stephen Myron out there basically doing the president's bidding, calling for very sharp rate cuts immediately. I guess that would be, in order to get there, you'd have to have a 75 and a 50 from here. So one of the remaining meetings would have to be a 75. One would have to be a 50 in order for Stephen Myron's outlook, or the person whose dot this is, their outlook to be accurate.
Yeah, that dot, as they say, is kind of like this Canadian reference, the yellow knife in the Northwest Territories, kind of way, way up and out there. Steve, stick around.
There was a joke, Brian, there was a joke among one of the Fed reporters here that we were going to have to get a legal pad to get the dot plot together. It'd have to be a longer piece of paper.
I love that. You go from the 11.5 inch to the full 14. I mean, I'm old enough to get that reference. Steve Leisman, thank you very much. Let's go back now to our esteemed panel. Steve is still there. We still got to look through it. By the way, I'm trying to recycle the internet so I can compare the two. Francis, your immediate take on this decision?
Well, hearing about that dot plot, maybe it'll come in defense of the dot plot. There'll be a lot of comments about this being very political in nature, but this wide dispersion in views on this Fed.
The Fed, I thought the Fed wasn't political.
Well,
it's independent.
It's independent. Let me just say, because there's going to be questions about this, that there is a lot of confusion about the state of the U.S. economy now. It's not clear how much should the labor market truly be weakening. When will tariffs come through? And some of this dispersion we might be seeing in dot plots, some of it, not all of it, may very well be a reflection of the confusion of this economic moment. So we have to be careful about taking any headlines about the median dot here.
Some of y'all are so funny in the chat. A lot of y'all are experienced. Some of y'all are just showing a lack of experience there. Like I said, you're gonna see wicks like this, right? Some people are saying gold took a shit. Some people are saying gold didn't take a shit. Some people are saying gold is fucked up. Guys, you're trading the most binary event in the market. But like I said, that 4-hour fair value gap, that is my target for NQ. And maybe ES. Maybe NQ gets up here before Jerome talks, and maybe I don't think ES gets up here. I think maybe ES gets up here and maybe NQ gets up here. I don't think NQ gets to all-time highs, and we might have divergence there. But that 4-hour fair value gap is what I was eyeing for the first manipulation, and I think that there will be a move. There will be another counter move when we get Jerome Powell on the mic. So Tesla's flying. Yeah, it hit my my target. So I sent out a Tesla alert earlier in the day at 11:30, but that was my target on Tesla. Were these equal highs here at 423. And it took those equal highs at 423. So the Fed cut by 50 basis points. Sorry. The Fed cut by 25 basis points. We don't obviously know what Jerome Powell is going to say because he's not on the mic for another 24 minutes. But I do think that there might be a counter move. Until then, we did trade into that 4-hour fair value gap that I was talking about. And I want to see if we can catch a move down off of this power of 3 here. Guys, there's 3,000 of you here. First of all, thank you so much. Second of all, please hit that thumbs up. Your mic is buzzing. Really? Is anyone else hearing that? What's the link to buy traveling trader gear? Oh, man. I don't know that we have merch just yet. I mean, we obviously did have merch before. But I haven't done a new round of merch. No buzz, it's just in the guy's head. Y'all are funny. You see this PO3 here? I wonder if we get a downward move on Tesla back to 409. So Tesla took out those equal highs that I was eyeing pre-market. For those of you that were on the stream this morning, that was one of the potential draws on liquidity. And I think that there might be a move down. That right there is data low, but I think there might be a move down back to 409. Let's see if I can trade that down. See, we took those equal highs. And I think there might be a move down to there. Holy balls. Damn, Tesla was a move. This shit's going to 409. Gold took buy-side liquidity. I wonder if there's a short here. I think there might be a short here. Let's see if we can get down to there. Before Jerome Powell talks. I'm up 1,800 on this. I want to see if we can get down to that low. And take one off. Come on. Because data low was taken. We just need to close below this fair value gap. And I think we can even potentially go lower. Oh, man. If we get to that wick, 3685, that'll be wild. Jerome Powell talks in 12 minutes. I would love to see a full flush down to at least the 0.5 before he talks. I don't know if that's possible. Shit, I don't like that we bounce off there. Want to see a rejection here. Yes. Close below that. Nine minutes until Jerome talks. Yes. Boom. Nut achieved. 2,300, just like that. Just like that. We repriced exactly 50% of this entire move. I'm okay with that. Got that one in the bag. Yay, yay. Perfect move on gold. Perfect move on gold. Oh, shit. You guys are throwing out the W. Hey, put a W in the chat if you caught that. Or a nut. Nice. Perfect move on gold before Jerome Powell talks. Did he just ice cube his win? What the fuck does that mean? Oh, because I said, yay, yay. Yeah. How much did you invest? My boy. That is a hilarious question if you think an investment is done in 30 seconds. An investment is something I'm going to hold until I retire or life retires me. That's not an investment. It's a trade. What is Powell saying? Who the fuck knows? He ain't talking. Other YouTubers aren't as confident as you. I can't speak for other YouTubers. All right, let me see who's been. There's 2,700 of you and 700 likes. Look, at least get the thumbs up. And secondly, if you want to trade live with me every morning, link is in the description. I go live every single morning at market open. I'm done trading Tesla for the day. We caught the short in the morning. I sent out the long in the Discord right there to take out those equal highs. If you stayed in until FOMC, good job. If you didn't, also fine to manage your risk. But to the T right there, bro. Hey, are there any Turkish people in the chat? We're going to find another play, I promise. I just don't want to trade while Jerome is talking. Just like this, we waited for the release of the actual announcement and then found the trade. If you want me to explain the trade, ask me in the chat and I'll explain the trade, like why I took this short here and why my stop limit was there, why my take profit was there. I'll explain it to you in the if you leave it in the chat. But I'm not taking another trade for another 4 minutes. The reason why I'm asking if there are any Turkish people in the chat, if there are, do you recognize this? Probably the greatest name for a product ever made. Nutcum. In honor of the nuts that we collect when we're trading. Jerome on the mic. In 3 minutes, folks, I will be covering it live for you, and then we will try to find another trade. I also want to see if I can grab this HIMS multi-day short to these 40 levels. See? Initial move. That's a manipulation. Secondary move. And we may get a third move. And we will find that trade, ladies and gentlemen. Please explain the trade. Okay, I will. After Jerome Powell says, "Good afternoon." I will. I promise I will. Are you a Turk? No. I got love. I got love for everybody, but no, I'm not a Turk. My boy Soner is a Turk though, and he's in the chat. Kenny Ken says, "I joined about a month ago. It's been raining money since." Hell yeah, bro. What's your username in the Discord, Kenny Ken? Just so I can say what's up to you. I'm not Turkish, but I see it daily? Nah, bro. The only place Nutcum exists is in Turkey. It's their version of Nutella. When you order simit, they give you Nutcum on the side if you ask for it.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. While the unemployment rate remains low, it has edged up. Job gains have slowed, and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals, and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles has picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of this slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant. In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the marked slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027. This path is 1/4 percentage point lower than projected in June. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Policy is not on a preset course. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Great. Thank you. Chris Rugaber at Associated Press. As you know, Fed Governor Stephen Miron has kept his position at the White House, even as he's joined the Fed board. This is the first time, I believe, the Fed's board has had someone with executive branch ties in decades. Does this compromise the Fed's independence from day-to-day politics? And relatedly, how can you maintain the public's perception the Fed is politically independent with this dynamic? Thank you.
So we did welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. We're strongly committed to maintaining our independence, and beyond that, I really don't have anything to share.
Okay, and then just as a quick follow-up, I'm sorry, can you and other Fed officials have spoken extensively about the impact of tariffs on inflation, although perhaps with many companies appearing to eat the tariffs, tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation? Thanks.
You know, it's certainly possible. You know, we're beginning to see, we have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point, and we do expect them to continue to build over the course of the rest of the year and into next year. And you know, it's also possible that there may be effects on employment, but that I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come way down. There's very little growth, if any, in the supply of workers. And at the same time, demand for workers has also come down quite sharply, and to the point where we see what I've called a curious balance. It's, you know, typically when we say things are in balance, that sounds good, but in this case, the balance is because both supply and demand have come down quite sharply. Now demand coming down a little more sharply because we now see the unemployment rate edging up.
Nick Timrose of the Wall Street Journal. Chair Powell, do economic conditions and the balance of risks no longer warrant a restrictive policy setting?
So I don't think we can say that. What we can say is this, that over the course of this year, we've kept our policy at a restrictive level, and people have different views, but a clearly restrictive level, I would say. So, and we were able to do that over the course of this year because the labor market was in very solid condition with strong job creation and all those things. I think if you go back to April and now look at the revised job creation numbers for May, June, July, and August, I can no longer say that. So what that means is that the risks were clearly tilted toward inflation. I would say they're moving toward equality. Maybe they're not quite out of equality. We don't need to know that. But we do know that they've moved meaningfully toward greater equality, the risks between the two goals, and that suggests that we should be moving in the direction of neutral, and that's what we did today.
Under what circumstances would a larger than 25 basis points rate cut be warranted, and how seriously was that option entertained at your meeting this week?
There wasn't widespread support at all for a 50 basis point cut today. You know, I think we've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when you feel that policy is out of place and needs to move quickly to a new place. That's not at all what I feel certainly now. I feel like our policy has been doing the right thing so far this year. I think we were right to wait and see how tariffs and inflation and the labor market evolved. I think we're now reacting to the much lower level of job creation and other evidence of softening in the labor market, and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now, and so that warrants a change in policy.
Colby Smith with the New York Times. Should we be viewing today's cut as the committee taking out some insurance against the possibility that the labor market is at risk of weakening? Or is it the committee's view that the dynamics of a downturn are already in place? I guess I'm just trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago, with the fact that the forecast for unemployment didn't change.
Yeah, I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually, the projections for growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risks to the labor market. You've seen, we were looking at 150,000 jobs a month at the time of the last meeting, and now we see the revisions and we see the new numbers.
All right, so the Fed is projecting 3.6% in their Fed funds rate by the end of 2025. Let me just look at the Fed Watch tool real quick. So that would put it in line with a cut in October and a cut in December. So in terms of what the Fed is expecting by the end of the year, it's expecting what the market has already priced in. So at least there's confirmation there. Wow, gold is still going. I saw someone in the chat saying they're still in the trade, which is dope. Damn, why are we dropping? My God, bro. Every FOMC, it's the same thing. Why are we rising? Why are we dropping? Why are we rising? Why are we dropping? But yeah, I mean, I think this right here is just all normal price action for FOMC. The reason I was targeting this for gold is because of that wick right there was part of the data wick. Still hasn't been taken. I'm already out of gold. Took profits on it, but that right there, in my opinion, is going to get hit at 36.85. Little Bravo says still in the gold short. Hell yeah. You and Smokey. Good job, guys. Buy the rumor, sell the news. Yeah, I mean, the 25 basis point cut is priced in. So, you are going to get some sell the news, but it's also important to put things in perspective, right? Like when you look at the overall market, this is where we're at. So you're getting a little bit of sell the news. Remember that we've gone up since Jackson Hole when right there, August 22nd, when the Fed cut was projected, right? So you had this rally and now you give some of it back. But I don't think that this is anything super drastic where someone in the chat is calling for a 20% bear market because of this, which is hilarious. But yeah, certainly part of this is sell the news. And I'm looking for another potential trade. So would love to see a move on Tesla back to 400 in the coming days. Ethereum still within reach of my target at 4,000, I would then likely entertain a pretty big position on BMNR. Palantir call? Yeah, bro. Full port Palantir calls. Blindly, too. Why not catch NQ on the way down? Go ahead, try catch it, bro. Short it right now. For those of you that are just joining the stream, I already entered a trade. I'm up 2,300 so far, and I'm going to find another trade. But whoever was talking about catching NQ, go ahead, catch it. All right, let's see where we're at here now. We're in the daily fair value gap. I think there could be a long on the horizon here. We still haven't taken out 230 high. Which is when Jerome started talking. I might entertain a long on ES. I think there could be a long on ES here. Oops.
You're right there that it's a wide dispersion of views, and I think that's understandable and natural in the current situation.
Hi, Victoria Guida with Politico. You've talked a lot about Fed independence and the importance of it over the years, but as markets have questions about what exactly President Trump's intentions are with the Fed, what would you point to as the things they should be watching to determine that the Fed is still making decisions based on, the economic outlook rather than political considerations?
Look, it's deeply in our culture to do our work based on the incoming data and never consider anything else. That's just everybody who's at the Fed really feels strongly about that way. So
if this right here, if this,
you'll know it by the way we talk about what we're doing, by the
ES
speeches that people give, by the decisions that we make. You'll know that we're just still going to do that. That's all we do. And we don't frame these questions at all or see them in terms of political outcomes. I think when you get to another part of Washington, everything is seen through the lens of does it help or hurt this political party, this politician. That's the framework. And I think people find it hard to believe that that is not at all the way we think about things at the Fed. We're taking a longer perspective. We're trying to, serve the American people as best we can. So I think you would be able to tell. I don't believe we'll ever get to that place. I would say we're doing our work exactly as we always have now, and people they're making their arguments, and we're having really a great discussion around these challenging issues. So
I don't want to see ES go
around
below
Lisa
that.
Cook as being related to questions of Fed independence?
I see it as a court case that it would be inappropriate for me to comment on.
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So we saw the preliminary benchmark revisions down 911,000. The revisions for June were the first negative revisions we've seen since December of 2020. How can the Fed base important decisions on rate and what to do with the interest rates on data that seems to be, as you've called it in the past, noisy?
So on the QCEW, the revision that we saw was almost exactly what we expected. It was amazing how close the expectation was. So, and the reason for that is, for the last bunch of quarters, there's been almost a predictable overcount. And I think
so we have high time
Bureau
frame
of Labor
divergence.
Statistics really does understand this, and they're working hard to fix it. It's got to do, of course, it has something to do with low response rates, but it's also got to do with what's called the birth-death model.
Between NQ and ES?
Because a good amount of job creation happens around new companies, and how many go out of business, how many are founded. And it's just really hard. You can't survey for that. You've got to have a model that predicts that. It's quite difficult to do, especially when the economy is undergoing big changes. So, and they've been working on that and are making progress on it. But the data we get is still well good enough for us to do our work. To the extent we have issues around data right now, it's about low response rates. That's happened all over really. Response rates are just lower to surveys now, both in and out of the government. And it's no great secret. We want higher response rates, and we need those to have, less.
I was going to say you can trade SPY options. But it's not my favorite way to trade, because there's not enough time to get in and out, in my opinion. I think there's a long to the 230 highs Like I said, you could trade SPY calls or you could trade futures. But we have high time frame divergence, bullish divergence between NQ and ES. We did dip into that daily fair value gap. If we cross above this, if we close above this, we'll get a CISD, which NQ technically did, but would love to see one from ES. And the target is either ES or NQ hitting this 230. That's when Jerome Powell started talking. So I would love for ES to hit it because I'm in ES. This is already at 2-1. Depending on when you took it. But I want to see if we can get up to that nut. Wow, bro. What a day. My stop is at break even here already. Hell yeah. Let's see if we can get the second nut of the day. I'm looking for either NQ or ES to hit that 230 high. And then I'll be out. You just made me $1,000. Thank you. Appreciate it, man. And I'm happy. Let's fucking go. Man. Boom. Boom. Nut hit. This is why I'm saying I don't prefer options over futures, because getting in and out and dealing with the premiums, and unless you're really experienced and you know how to market in and out, like when you want to market into an option, that when you're going long, you want to market in as the option is dropping so you can get the cheapest price. A lot of people end up marketing in as the option is going higher, and then when it retraces, they're already down 20-30%, right? A lot of times people try to do limit orders when they're trading options in a very rough environment like this, and they never get filled. And so then they cancel the limit order and they get fed up and they go straight to the market order. But by the time they market order in, it's too late. Trust me, I know this because I've made all these mistakes over the years. So for those of you that are trading options, more power to you if you have a lot of reps and a lot of exercise under your belt. But it is a tough way to make a living on days like today, and you're much better off trading futures, in my humble opinion. I'm not against options. I was day trading options with the crew in the morning, but I'm saying during times like this. Also, when you know about liquidity, you have like Thanos's power in your hands, right? Like the fact that I know that this is a draw, when people are just looking at this as a random high, or even on gold, right? They're looking at this as a random bottom. It's not. These are data highs and lows. And if you understand the markets and you understand how algorithms are tuned, these things make a difference because there's a lot of liquidity left at these levels, right? This is when the 2 p.m. is when the Fed rate dropped. And here you have the 2 p.m. high and the 2 p.m. low. The 2 p.m. high was taken, but not the 2 p.m. low, which is then your target. And then 2:30 is when Jerome Powell starts talking, right? Jerome Powell starts talking at 2:30. The 2:30 low was taken. Moreover, we dipped into a major imbalance. You guys saw me looking at the 4-hour here, and don't think that I didn't see someone clowning the fact that I said fair value gap as if it's something that doesn't exist. Clearly it exists. Clearly it was a precision entry. But moreover, NQ made a lower low. ES made a higher low. That's called bullish divergence into a major level that I was eyeing. And now on the low time frame, depending on what model you're trading, you can either turtle soup it from that 4-hour fair value gap. You can wait for an IFVG entry. You can wait for a 2-minute CISD, either or. But the more that you understand liquidity, you don't need indicators or any of that. You know where the market is drawing to. Now, when I took profits on ES, even though I was in ES and not NQ, NQ happened to be the stronger pair after this push up. And plenty of times, what happens is the stronger index takes the liquidity level while the other one retraces heavy. ES will eventually take this, but my goal is to try to book 4-to-1, 5-to-1 trades when it's optimal. And then if it retraces, maybe catch it again, right? But I'm not going to leave a 4-to-1 trade on the table and suffer a retrace just for a moral victory. Now, if I didn't quite hit 2-to-1 yet, yes, I would probably hold this and suffer through retraces and all that until we get to this nut. But I'm already up 4-to-1. I'm not suffering a major retrace. I'm going to book it. And then if I want to, I now have the luxury of re-entering this trade. But hopefully that makes sense. I said I would explain the gold trade to you guys. The gold trade was this. We had the data high and the data low. Data high, which is 2 p.m. when the rate cut release was dropped. We took the 2 p.m. high. We left the 2 p.m. low. So this is naturally a draw on liquidity. Okay. Then on the high time frame, this was the previous day high that was taken. You can see it more so on the 4 hour. So a major high was taken along with that 2 p.m. high, right? So the 2 p.m. high was taken, but also a major high was taken as well. So we had a lot of buy side taken, and then we inverted this 2-minute fair value gap. You can see here, and that's where I initially took it short, and that's really it. Now, I personally did not hold it until here. I know some of you did, and I congratulate you. But we were coming up on 230, and as you see, gold took out both buy and sell stops at 2 p.m. Same thing could have happened at 2:30, right? Once Jerome said good afternoon, these stops could have been wrecked. And so for me, I was already up, 3 to 1 on the trade. I was up $2,300. That was my first target profit. My ultimate target profit was there, but I didn't hold it until then. So hopefully both of those things make sense. Why enter on ES when ES was the weaker pair? That's a fallacy. Whatever rule you're quoting doesn't exist. They flip strength back and forth a billion times. Also, ES wasn't the weaker pair. ES was the one that made a higher low, and Q was the one that made a lower low. So even if you are trading by that made up rule, you stated it incorrectly. For those of you that aren't in the Discord, shameless plug here, just because I want to remind you that I go live every single morning. And it's a live trading session like this. Actually, there aren't 13,000 people on the stream. It's more like 1,000 people, and it's way more intimate. And certainly price action is not this fast, flipping bullish to bearish this many times, because every day is not FOMC. So it's a more relaxed trading environment for sure. But up over 3K today, all on the stream. So you guys should be up too. Guys, if you banked anything or if you learned anything, leave a thumbs up. All right, I'm going to go over a couple of setups. For those of you that are not in the Discord, I will still give you a little bit of a treat. So I'm waiting for HIMS. I'm not in a short yet, but I'm waiting on a short to get to these equal lows here. I'm in Tesla shares. I'm not in swing Tesla options yet. Would love for that 400 level to get retested, and then I'll consider it. I think this right here is an overreaction on Uber. because of Lyft's stupid announcement about, I don't know, they're partnering with Free Now or something. There might be a potential play on Uber. Looking to see if CoreWeave can break out of this trend line. If it does, I think that can start a move to the 180s. And then JD, if you guys watch my videos, you know this was on my list for a breakout as well. I think ASML hovering here around previous high can give us a potential move to the 900 soon. And yeah, for those of you that are wondering, that keep asking why the day is bullish or bearish, the market is flat, guys. S&P is down 0.2%. NQ is down 0.3%. The market is flat. You know, you're just getting hypnotized by these huge moves that we see intraday. Otherwise, the market is super flat. I'm going to do a video later. I'm going to read up on Powell's full statement and see whether he says anything that's worth noting. Otherwise, most of this is priced in, guys. Most of this is priced in. But happy to make money. If you want to trade live with me every day, link in the description below. I appreciate you guys hanging out with me. Hope I got you paid. I'll see you guys in a bit. Peace.